Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back. Another week, another trading week gone by. And as far as I'm concerned, this podcast going to be a short one because from last week and last couple of weeks really, things have been more or less stable. Just the main U.S. indices and around the world just keep on going up, and doesn't really care what is actually happening to the main economy. For last week or last 10 days or so, we have of course the Black Lives movements increasingly getting more and more. Grow in importance, and a lot more people demonstrate, and especially in US, and now it's in UK as well. Mostly is peaceful, but a lot of people using it as a way of looting other places and things, and it's not very nice. But the real economy is tanking, and a lot of people are starting to go back to work, and the main that's what's happening in the main economy. But in the stock market, is already priced that in, and it basically last couple of weeks continue moving up. And last Friday, we got May unemployment rate, which basically have reduced, and apparently the more about 2.5 million jobs been taken back, and so the meaning unemployment rate is around 13, but not under 14% or something. But it's that was a real surprise. And then there's because everybody was looking for maybe another million negative or something like that, so pushed the whole thing up near the unemployment rate in US needed 20% mark, but it didn't. So it's come back down to like 13.5 or just below 14%. So that was a big surprise, and the stock market used that excuse to push it higher. And I personally believe people in general just expecting unemployment rate to be quite bad next couple weeks and months, even though it's slowing down with unemployment rate, but it's still, collectively, cumulative is increasing quite a lot. And but then suddenly a big surprise, a big jump, 2.5 million jobs added, caused a lot of people surprised. I think there's a big short squeeze, and then the market, I think, on US, meaning to see gone Dow Jones gone almost 1,000 points, like 900 something points. And the Nasdaq, for example, have gone string to string, basically created new high. This new high is at the time, currently, and with real economies tanking, a lot of like Amazon, Zoom, and Square, those kind of shares, Microsoft, going out quite a lot, but other shares are tanking. But with the Fed seems to be putting lots of money into the market, and around the world the financial institution authorities also putting money into the market. Basically the main indices around the world just don't care, just keep on going up and up, and as if nothing much happened. But this is what I've foreseen before. The market will go up until everybody say it's basically think it can never go even higher. It will just continue to go higher, and then fear of missing out, people just jumped in, and at that time, that's a time when you have to be worried about things, and then the market suddenly tank, and it happens back in February when everybody thought things are okay slowing between the economy because China and US having the trade war may have signed the deal, but the details in the devil. The devil's in the details, so to speak, and when would China buy things and how much would actually buy and those kind of stuff. And then suddenly we got the lockdown, the virus comes in, and then of course that knocked us sixes, and the economy went down and now come back up again because of possible vaccinations drugs is available, or doing good trial tests, and then we are slowly opening of the market, of the economy. People start getting back in more jobs, and then of course the stock market is more forward looking, like 6 months ahead or something, 3 or 6 months. So it's gone back up again, but now it's definitely gone to what I call unrealistic territory. Possibly can still go a bit more until lots of people basically say, okay, I give in, I better not to miss out and go in, and that's the time that's got to be careful. That's why I said earlier. But I personally, as for trading wise, nothing much happened. That's why I say nothing much to report, because the last 2-3, we can say since end of March, early April, that kind of thing, when the market have turned, which basically moving upwards, and my trend following, I've been tracking it, and the weekly report, you guys probably, if you're a long-term listener, will know that I've been long, meaning this for the last 6 weeks or so now, and that before 4 weeks, between 4 or 6 weeks, simply because the market price is saying going up, and just follow. And for trend following wise, I just follow the trend. Nothing much happened. The Friday surprise increase in the unemployment rate, job unemployment rate, so to speak, increase of jobs. Basically just moved the indices much further along. The other thing is the US dollar index seems to have gone down, and it's broken below 97, and so a lot of the currencies are gone up. So British pound against US dollars, US dollar against euros, and US dollar against Japanese yen, all gone up a bit. So that is quite a lot of movement, but on the whole, it's basically just following what the trend following has been doing, just following the trend. So nothing much to report. So overall, what I worry about though is more of the demonstration that because George Floyd death, and then the Black Lives Matter movement, a lot of people is gathering to demand change, but a lot of course is wearing masks, but they're in very close proximity, and many is in US and UK as well, and other places. And I'm just worried the virus might come back quite quickly again now. Doesn't matter about reintroduction of virus maybe coming from another country when the international flight traveling again start to happen again. But now I think I'm just worried. I mean, this demonstration will be about 2 weeks now, so probably the next couple of weeks you'll see. Especially in US, the increase of coronavirus death hasn't actually gone down yet, or much of it. Still quite high. I just worry about this demonstration just go to prolong the virus spread or stay around for a bit longer yet. So we will just have to wait and see how it goes. Overall, also China has been been quite vocal lately. Basically, pointing a finger back to US, saying, when Hong Kong was having demonstration, US will say, it was a beautiful sight for democracy, people demonstrating for change, for better. And US is behind the demonstration, even though a lot of it turned out to rioting, just like US, that's what's happening now, and then caused a lot of trouble. And China, now the table is turned, with all the demonstration going on in US, and basically China just pointing the finger to them and say, look, what a beautiful sight, back to the U.S. Politicians, because that's when Pelosi was saying that. Miss Pelosi was saying that when the demonstrations happened in Hong Kong. So using the same energy, so to speak, and say, all this demonstration that's happening, how the U.S. police force reacting, and also the president, how it handled the demonstration is basically not very good. And China basically just come out a lot more. I mean, previously during before the first signing of the trade agreement, China is more like quite reserved. When US say a lot of things, especially a lot of stuff, China didn't say much. But now it's quite different. Irrespective of whatever what US is saying, China, when they still don't like it, basically I think their backs against the wall. Basically just push back to the US. and pointing the fingers back to them, back to the U.S. So it's quite a change politically, and then we basically, from as far as I'm seeing, this new front of Cold War is definitely happening. If people say it doesn't really happen, and China will just go to succumb to U.S. Demands, I don't think so. So I personally feel this tick for tat between U.S. and China is going to go on for some time, just like when U.S. was trying to go supersede Britain when Britain was the big boys, so to speak. Britain, I remember. I think for me, my history is correct. What I've read is correct. Britain have started a couple of wars with U.S. and then back down later on, that kind of stuff. But I think with similar stuff when China now is coming up, U.S. going to start to do all sort of different maneuver to try to suppress Chinese rise to China's improvement, and I think that it just repeat itself, just continue move up. But as far as trading is concerned, that may basically make the prices of the index and currencies and commodities going down like haywire, because who knows what will happen. But what I worry is personally in for China and Hong Kong as well is U.S. continue to use Hong Kong as well as Taiwan as a pawn, and then basically poke at China, and China get quite frustrated and start using ships, so to speak, and go near the south, near the U.S. ships, warships near the South China Sea kind of thing, and might have some very close encounter or kind of things, and that will basically bring the whole level up a bit. But we just have to wait and see. So without further ado, next is update on my portfolio update. Okay, first off the bat is Apple. Short term is a buy. Now medium term is turned to buy as well, and long term is a buy. What's surprising this week generally is obviously the surge in the market. Basically just continue what basically on Friday this non-farm payroll pushes up everything. So Apple following the herd basically and just going up. So medium, long term, and short term now are buy, is even though the real economy is having difficulties. Next is Amazon's continue for rating like last week. Short term, medium term, long term is a buy. Australian dollar continue with strength, recent strength. Now there's last week as well has changed to all buys across the board, so continue theme this week. So short term, medium term, long term for Australian dollar against US dollar is a buy all across the board. Next is Brent crude, and it's buy short term, buy medium term, long term is still neutral, and follow after that is crude oil. Again, short term is a buy, medium term is changed to buy as well, long term is neutral. So it is basically it's a reflection of the world lockdown is more or less slowly coming to an end, but how much trade activity will be across each country is still well unknown, but the price of crude oil and Brent crude seems to have shot up. So short term, medium term seems to have gone back to buy now. It's not too bad. DAX, following the US basically. Short term, medium term, and long term all are buy now. So it's quite amazing. Dow Jones, especially last, as I said, Friday, the sudden increase basically, put everything up pretty well. So short term is a buy, medium term is a buy, long term now is also a buy, so it's very good. After that is FTSE 100. FTSE 100 short term is a buy, medium term is buy, neutral for long term. So for FTSE in UK, still haven't catch up with Europe and US yet. Gold, it's quite a bit of fluctuation lately, because especially on Friday, when the basically the job claim, suddenly shot up, positive, then negative, everybody expect, and of course the share price went up, and gold going to be first. So short term is still a buy, just. Medium term is neutral, long term is just against it's still a buy. but there most likely some movement next couple of weeks to change size, so watch out for that. Next is Hang Seng Index. Short term is a buy, medium term is a buy, long term is a neutral. So across the board has changed this week. So short term is a buy, medium term is a buy, long term is neutral. Nasdaq, well, continue as upward surge. So short term, medium term, long term all a buy. Nikkei, similarly, I think it's one of the better index in Asia. So short term is a buy, long term is a buy, medium term is also a buy. So across the board, very much like following the American lead, so to speak. Silver, similar to gold. Short term is a buy, medium term is neutral, long term is still a buy. So both gold and silver is just still hovering above the 50-day moving average, up just above the 280 hour breakdown line. So we just have to wait and see, but most likely change next week. Next is US dollar against the Chinese yuan. Short terms change to sell now. Medium term also changed to neutral, so it's long term change to neutral. So basically, the sudden weakness in US dollar causes a surge in Chinese yuan. So we just see how it goes. Next is US dollar against Japanese yen. Short term is now changed to a buy. Medium term is neutral. Long term is a buy. British pounds against Japanese yen. Short term is a buy, same as last week. Medium term changed to a buy now, and long term was changed to a buy. So the weakness in Japanese yen somehow across the board. I think people getting out of so-called safe havens, getting out of bonds, which I'll talk about later, and going to share and equity. So basically, the safe haven of Japanese yen seems to have loosened its strength, and basically across the board is losing strength. So British pounds, Japanese yen is no difference. Next is British pounds against US dollar. Short term is a buy, medium term is a buy, long term is still neutral. So got a bit again a bit more strength here this week. Bitcoin, same as last week. Short term is a buy, medium term is neutral, long term is a buy. Bitcoin is this odd one, still a sideways trade, stuck between basically the I think that's that we have the 200-day moving average and this £10,000 mark, $10,000 marks, and just like continue up and down that way. It did break above it, I think this week or earlier last week sometime, but then it quickly came back down. So 10,000 seems still a formidable barrier, so to speak. Next is iShare 20. Basically it's tracking the bonds market, and continuation short term is a sell, neutral for medium term, neutral also for long term. So the overall theme, it looks like continuation of the index going up, even though everybody else said the real economy is going down. But the market, as usual, do its things. So as a trend follower, we just follow. I did say before, the market will go to insane level. As if like nothing happens. Not insane is in the terms that realistic when compared to the main street, so to speak. So it is doing that, and probably continue for a little bit until everybody give in and say, okay, let's jump into the market, and then that is about time to turn. So I think now it's near that area. Especially there's a lot of reports in America, so saying a lot of retail traders, investors, and suddenly jumped in when the big boys, the big investors, hedge funds, they're more like sellers and stay on the side, not doing anything. So this probably is, to me as well anyway, it's a warning sign, because what Warren Buffett says on that one is correct. Short term is a voting machine, long term is a weighing machine for the stock market. So at the moment, a lot of people is basically voting for a quick return to normalcy around the world, and in the US as well, and in the economy. But the real economy is not really doing that. A lot of people may got rehired, so to speak, after they have been laid off during the lockdown and so forth. But the real significance comes in, I think, later on next couple of months when people start to work. Amount of people getting rehired and type of work they actually get sucked back into the economy could be quite different from what people expect. And also, especially all this following going on in UK as well as in US. I think in October, when the latest supply extension stops, then the real situation will come out and say if anything actually going to happen and so forth. So we just have to wait and see if people are actually keeping the job permanently and how much job that's been getting back into the real economy. So it's got to take a bit of time, but the market is just like to do its things and quite forward looking. So at the moment everything is rosy. As a trend follower, we just follow a trend. We make money up and down, and we just see how it goes. The worst time is very much like Bitcoin going sideways. It's not going up or down big time, so it's not making much money on that. A lot of time those sideways trades hurt us. But we just have to wait and see. We're a trend follower. Remember, trend following is there's a trend, we follow, we respond to it, respond to what the market have done, and then we go through our calculation, our methods, and then respond in kind, that sort of thing. And the market go up, we go. The markets do nothing, or sideways trade, we do nothing. The market go down, we trigger by selling shorts. So we just have to wait and see. So this is the end of my podcast for this week, and I speak to you next week. Bye for now.